Remember to like, subscribe, and comment to show support to the Limitless podcast, and don't forget to press the notification bell so you never miss out on our latest content. Thank you for your support.
Hi, everyone. My name is Theon Sims, and welcome to the Limitless podcast. Joining us, as always, is your co host, Dr. Matthew Preston. Hail up the people, and Matthew.
Hey guys, what's good?
Excellent, excellent. Today, as you can see, we have the founder of Stocks on the Rocks. He is also the Assistant Vice President of Alternative Investments and Structured Finance at Barito. Welcome, Simon Johnson.
Yeah, man. Thanks for having me, gents. Thanks for having me.
Great to
Even
have
though
you
it
here,
doesn't look
Simon.
like it, I'm happy to be here. I'm just a bit tired.
Oh,
That's okay, man. That's okay. You're always working, and the people them can see it. Whether the people on Twitter, people that actually go to Stocks on the Rocks, and so on, everybody can see it. So we love the work you're doing, Simon.
Yeah, man.
Okay, so Simon, nice to have you on. I don't remember how. Actually, I do remember how we met. I don't think you remember how we met. I met you
Mm.
at one of the early Stocks on the Rocks. This was 2019, and
Oh,
there was a time where you guys had it at I don't think it's I think it's where Kingston Jerk is now. I don't think it's called Kingston Jerk. It was called there. It was it Scotches before, or I don't
yeah. It
remember.
was Scotches. We had a session there. I think it was probably because of the rain.
Yes, it
But
was
we had
probably
a, we
because
had
of the rain.
one session there. Yeah.
Yeah, me and my friend went, and yeah, it was a decent little crowd. Still, I met you. I met Julian, Morrison. Big up Julian, and that was also part of my introduction to stocks, and just hearing you
Mm.
guys speak about finance overall. I love that. So I love the work you do with stocks on the rocks. So big up,
Yeah,
man. Big
man.
up.
Much
And it's
respect.
getting bigger and better every time you guys host stocks
I
on the
I heard you
rocks.
guys
So.
had like a bar, the last one, like a proper bar.
Yeah, I mean, yeah. First Rock Private Equity is one of our sponsors now. They brought Barcode.
Nice.
That's a Barcode. Those professional bars. I mean, we have a little production team and things. So it's going pretty good.
That's
Mm-hmm.
big, man.
I
That's
see you
big.
guys with your lights. You have your big lights and all that
Yeah,
stuff.
yeah. I mean, boy, the guys that assist on the audio visual side, they like to do things big.
Hmm.
So they have their own equipment and they bring it and they want it to look full production. So hopefully, as we fix a few kinks, it will improve. It improves every week. Actually, we actually add. Sorry, every month. We actually add something every single month.
Okay.
Something is added every single month.
What
So
was
it's
new this time?
Hmm? What was new this time was the bar. So assistance with the bar, just having people there specifically to help with that. And the last time, actually, I had Starlink internet for the first time. So internet was crispy.
Oh,
Before that,
wow.
a lot of people don't know, but we were either streaming on mobile data or one of the modems from one of the telecoms companies, which is not very
oh,
good in terms of speed.
Okay, wow,
oh,
look at that. Oh,
okay.
for the new people that probably don't know or have never been to Stocks on the Rocks, can you give like
Mm.
some context for Stocks on the Rocks for them?
Sure. So Stocks on the Rocks itself is a platform that I created to create inclusive spaces, as I call it, to have healthy discussions about money. So one of the first inclusive spaces that we created was actually at Palisados. So it was just me and a few friends one Friday. One of those Fridays after work that you don't want to go home yet. And we said, look, come we just go to Palisados, we buy some beers, go to Palisados, and we just sit down on the rocks and we talk about money and talk about investments and that. I thought it would be a good idea to invite Twitter, the finance Twitter people there, and I shared it on Twitter, and some people showed up. To my surprise, and I didn't think that people would show up to this guy on Twitter saying, "Hey, out at Palisados," which has no security or anything. But yeah, but people showed up, and then next month. people started to ask when it's going to be held again, and it's a boy, all right, I could try again. So
Mm-hmm.
eventually it became just a group of people which grew from, there's probably about 4 or 5 people the first time. And within that same year, 2019, when we started, within 6 months, we probably went north of 70 people. And within a year, it was over 100 people on average.
Nice.
So we just talk about finance, investments, insurance. People from all walks of life come. People from different ages as well. So people who have been in the stock market for north of 50 years come and share their experiences, how they would have used dividends over 50 years, to build, their life and to
Mm-hmm.
assist them in life. And they share tidbits about what the market used to be, and the phases of the market, share tips on savings, money management, etc. So it's really a rich environment. Over time, it transitioned also to include having executives of listed companies come as well. So
Mm.
effectively, so we've had Tyrone from iCreate, we've had Kevin from KP Reed,
Mm-hmm.
Honbon. I mean, many listed company CEOs come, and the purpose of doing that was actually a part of the original goal. Most investors, particularly smaller investors like us, do not get a chance to directly interact with the CEOs or the executives outside of probably an online AGM, or if you go to an AGM which is very structured, right? So when you're in a more relaxed, we create a more relaxed environment for you to have real conversations with the CEOs. So we've had Garden there, Kadim, and many more. We've actually had the Minister of Finance. He came out
Mm.
there not as the Minister of Finance. He actually came that night as Nigel. So he came and he gave us, I mean, it wasn't about politics at all. He spoke about his investment journey,
Mm-hmm.
his career on the private side, and how his mother specifically, assisted in him becoming more knowledgeable about investing and doing that. We've had the governor of the Bank of Jamaica uh, come out to Palisados as well to share the goals and the objectives of the Bank of Jamaica. So it's really grown tremendously from just 4 5 people sitting out there to talk to hundreds of people.
Mm.
Wow. Okay. I love
Mhm.
that growth. No, that's crazy. The from the minister comes out. That's huge. That's actually huge.
Yeah,
Uh,
I want to tell people that was a surprise for me as well. Um,
oh, you
so
didn't invite him. You didn't know he was coming.
No, so boy, which is I always tell people to always shoot your shot. Regardless of who it is. So I saw Dr. Clark somewhere. I think it was probably at Kalila. He was walking out to his car. Say, hey, Dr. Clark, just introduce myself, Simon Johnson. I do SOTR. And he's like, oh, what's SOTR? Oh, same thing that I just told you, financial literacy thing. We meet at Palisados. So, okay, oh, that sounds great, man. I'd love to come. It's like, oh, in my head, I'm like, sure, yep.
Yeah.
He's just saying that. So he gave me his secretary's number and said, yeah, just talk to her and let her know all the details. And I mean, like probably a few days before it, she called me back and she said, "Hey, so Dr. Clark is coming. He's confirmed." I was like, "Oh, wow. So what are the arrangements?" And I actually chose not to announce it on the flyer,
Yeah.
because naturally, if you announce it on the flyer, that Dr. Clark, particularly in that time, I believe COVID literally just happened. So he came February 2020, and
Mm-hmm.
COVID would have just started globally, probably December 2019, if I remember correctly. And he was doing the budget, and so he was very popular at that time.
Yeah.
So I know a lot of people would have wanted to come to speak about various things with him.
Mhm.
But he showed up he showed up, and it was very good.
Okay. Wow. Love that. Love that.
Mhm.
Is he one of your? Do you have like a favorite guest or like a an or a stocks on the rocks that's most memorable to you?
To
I know you're going to
so
tell me like all of them memorable, but like, is there anyone that just stands out just right as I said that?
so probably the ones that stand out to me, and people will be surprised by this is so I like to talk about investments and finance. I like to, sit and kind of have a no barriers conversation with people about that. And I think my favorite set of stocks on the rocks will have to be the ones that I've gotten to speak to people more, not necessarily just the guest speakers, because it's great to have them, but actually speak to, you know, the average investor, meaning the person that hasn't even started investing as yet. They just want to invest. They heard about this. They traveled from St. Mary. People have driven from St. Mary, driven
Oh
from out of
wow.
country to come to Stocks on the Rocks. And they say, I just want to start investing. I hear that you can help with telling me what's what. This is what I think about investing. What do you think? Those are the type of conversations that I really, really, really like to have with people, where I can share some of my experience and then some of the things that we know a lot of people don't know. Some of the very basic things, very
Mm-hmm.
basic, meaning that things people have asked me, look, so if I buy a stock and the stock price goes down, do I like does money come from my bank account? Do I lose anything personally?
Mm.
Mm.
Or anything like that. No,
I didn't
it's
even think
so
about that.
so
That's
yeah,
something
yeah, and
people would
so
consider.
exactly,
Yeah.
exactly. So and remember, there's a lot of money trauma in Jamaica coming from the era of cash plus, etc., and a
And
lot
it's
of
generational.
people,
It's handed
yes,
down from generation to
ah,
generation.
Well,
a lot of people in our generation saw the previous generation suffer through that. So we didn't necessarily fully understand what was happening, but we know that it was related to investments in some
Mm.
way, shape, or form. All right. So a lot of people associate that with something negative. So I like to have those conversations and kind of bridge the gap between what investments is traditionally considered as in some spaces
mhm.
and what investments can actually do for you as the average Jamaican to build your wealth and support your family.
Okay. Okay. I love that goal. That's partially
Mhm.
why we do Limitless as well. Just to have an honest conversation about the market in a very, I would say, relaxed and comforting environment. So that's why Preston and I just do it. We like investing as well. We just talk investments, and we try to
Mhm.
also now, because as you say, we may not be necessarily beginners, so it's always good to try and see from the beginner's point of view, what would they want to know, what would they want to hear, because in my opinion, the more people in the market, the better for the market. It's much better for the market. So, and it's better for them as well. So I love what you're doing. Keep doing it, Simon. Bless up, bless up.
Mhm. Mhm.
Um,
How
another a
did you get
question.
started?
Oh, okay, sure.
How did you get started investing, Simon?
So I've been exposed to investing from high school. So in high school there is a stock market competition that's done through the stock exchange. So I was one of the first persons originally chosen to do that. But to be honest,
Oh, you were chosen.
uh, yeah, yeah, because what
Wow.
they usually do is the business teachers probably choose some of the students that they think would do best in the competition.
Mm,
And honestly, in upper sixth, I was doing rugby. I was trying to do quiz. I was trying to do the head boy thing, and I,
head
I
boy.
I just didn't want to do it
This
do,
this
do
is this is
something else.
Calabar, right?
Yeah, yeah, this is Calabar.
Okay.
So I didn't want to do it, but my friends took it up, and boy, they really made me regret not choosing to go alongside them because it seemed so exciting. So this is
Yeah.
in the upper 6 days when they were competing with other high schools, and Calabar won the year before with a record. Calabar won the year that they were doing it, which is my year in upper six, and I
Mhm.
think probably a few years after that. But I still wasn't investing. They weren't investing either, but they were just investing in a,
They-
it's like a
oh,
simulation. So the stock
it's-
exchange creates like a
Like a big
separate
portfolio
platform.
kind of.
Yeah, man, yeah, man. So I started to talk about investing from then with them, just to understand from them who were
Mm-hmm.
actually in the, well, in the market, quote unquote, but it was a simulation. And when I went to college, the same thing. Matter of fact, we had very detailed conversations about investing, but here I never actually invested. So when I actually started investing, I would have been speaking about investing for years in
Mm-hmm.
college. So that's one of my biggest regrets, because one of the myths that I kept believing for a while is that you needed money to invest, meaning you needed to start investing with a lot of money. So as I went on work and travel and all of that, I was still saying, boy, I can't invest with just 50 US. I can't start invest with just 100 US. I need a good amount of money to start investing so I can make a good amount of money. But that's not true at all. You can start investing with whatever minimums the brokers have, and of course, after that, you can invest with less. So if you have $100, you can add $100 to an account. But you guys would know, since you invest at the cheapest stock on the market, is the last I checked probably about 40 odd cents, which is
That's the
less than a
money.
dollar.
Yeah.
Yeah, that
Yeah.
don't, well, the select funds are in the 40 cents.
Oh yeah, select
Mm.
funds. Yeah, that's true.
But
Yeah, yeah.
another thing people don't realize is, even if they have the minimum account number to say, oh, you need 20,000, 50,000, you can put 50,000 on the account. You don't have to immediately buy a stock. There's nothing saying once you put that money, you could literally move it on and then move it off. You can funds out the money after so you don't actually have to. You literally could start with a $1, $2, whatever you're saying, or just paper trades.
Oh yeah, that's true.
Yeah.
So I
And
mean,
then
no, no, I agree, and a lot of people there. I think the hallmark of somebody actually starting to invest is just opening up their account. So once they open up the account, it's like a
mhm.
cascading event after that. But the hurdle, the literal hurdle, is just opening the account. So
Yeah,
yeah,
I always tell people that over the years, after speaking to probably hundreds if not thousands of people about investing, probably the hardest part of investing is really just opening the account. When
always.
you have the accounts open, you can take advantage of opportunities, and everything after that comes down to your research and your conversations that you have with people, right? But I can have a million conversations with you about opportunities in the market, and you can do nothing with that information because you don't have an account.
Precisely. Yeah. Do you remember the first stock you bought by chance?
I was trying to go back on, so my first account was at JMB, and I believe the first stock I bought was um either Creamy or Jamaica Broilers. But to be fair, when I just started buying stocks, there was another myth that I guess I had as well. I just bought companies, so there was no real
Analysis.
rationale behind it. Yeah, there was no real analysis there. It was just um okay, I like ice cream, so and people like ice cream, so I'll buy
Mm,
creamy. I like chicken. Chicken can't come out of style, so I'll buy broilers. I like Grace mackerel, so I'll just buy Grace. And I mean, of course, that can be the start of an analysis. Means you can go
True.
further and then assess if the company, the prospects of the company going forward. But
Mhm.
from what I remember, when I just started investing, it didn't include that. I think I started investing probably about 2015 or 16. So it was pretty late, as I said, compared to when I actually started talking or discussing investment with my friends. Just sitting down and talking about it.
Mm.
okay.
Mm.
Okay. So now, has your investment strategy changed, and how has it changed?
Oh, a lot. I think I learned. very important lessons about investing each year, and probably I can go further than that. Lessons are learned constantly, and I believe that's a natural part of developing yourself as an investor. And over the years, you become a better investor by learning and implementing new skills and strategies that are specific to you. My strategy has changed over the years. As I said at first, when I started, it was really just buying whatever was there. Matter of fact, I had so many stocks in my portfolio, and as you
Mm-hmm.
as you you guys may know now, when you have, for example, 20 stocks in your portfolio, you kind of have to track 20 stocks, the
Yeah.
performance and what they're doing. So the more stocks you have, you kind of have to dedicate more time to kind of keep up on your investments. I
Hmm.
think over time, my strategy has shifted, and I've said it before that I think my thing is for now is a bit more bifurcated. So I have a portfolio that I trade from, um, and I guess the frequency of my trades really depends probably on the amount of time that I have. So there may be a time of the year where I'm not as busy, and I will trade more actively, right? I'll do very and I can trade. I don't think I'm a natural trader. My friend will know why I said that. But
Mm-hmm.
I do have the knowledge, and I have the ability to. Um, then there are other times of the year where I'll just take strategic plays in volumes and place that down for 6 months to 12 months. I generally tend to invest for that type of portfolio with an outlook for less than a year, though, right?
Okay.
Then I'll have another portfolio where I just buy something that is good, and I'll put it down over time, and have that built up. I think I've taken over the years, I've shifted to that within 12 months model more, my overall portfolio, because I've realized, and so as I track my investments now, maybe not on a daily basis, but at the very least weekly,
Okay.
sometimes once every 2 weeks, to be honest.
Hmm.
um, I've realized that you can continue buying over the years. You can continue buying a great company, excellent company over the years, and the stock
Mm-hmm.
price is going down. If
Yeah.
you buy that company cheaper and cheaper and cheaper over a 3 4 year period, and the stock price is going down, you're losing, right?
Yeah.
Um,
The company
no,
could be so good, but the company and the stock are
yeah,
not the
it
same
doesn't
thing.
it doesn't match up. It doesn't most of the times it doesn't really match up.
Hmm.
No, there are people that have a very long term horizon for their investments. So there are people that start out investing saying, for example, this is my portfolio for my 2 month old child for when they go to college. So this is a portfolio for 18 years, or over
Mm-hmm.
18 years, when you're buying a very good company at a cheap price. If the price eventually, what would say, if there's price discovery, or the price eventually improves based on the performance of the company, then you're great. Over 18-year period, you would have built up a lot of volumes at cheaper prices, and your average price would be relatively low to the
Hmm.
final price in 18 years, and that's fine. And people have done that historically. People have done that with the larger companies on the main market successfully, and they'll speak about that. I think I am where I am now, and for my own personal financial goals, I like capital gains. I like capital gains. So
Yeah.
We all do.
I won't go after that specifically.
Yeah, we
You know,
all
the,
do.
the,
We
the
all do.
irony here is that, and a lot of people may think I'm the complete opposite of what I just said. Even though I've said this before,
Hmm.
that I like capital gains. I want to see the prices of the investments that I have increase.
Hmm.
Mm-hmm.
So not too big on dividends. You much prefer capital gains.
Mm-hmm.
Um, I mean, I've grown closer to dividends. I'm not the for me personally. Let me just say it that way.
Yeah,
For
just
me
personally.
personally,
Yeah.
yeah, dividend income isn't a significant part of the overall income that I
Mm,
hope to gain for
Mm.
2023, for example.
Okay,
hmm
fair, 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 fair. I
And the
would I
story.
would 100% agree with you there for my portfolio as well. So
Mm.
don't know about
Wait.
Preston's. Preston dividends probably matter to him, you know, with his volumes. But yeah.
Mm. But to what you're saying, Simon, the point you brought up about the what you said, 17 or 18 years. Um,
Mm,
the tough part, I think, like when you're making such a long goal to say, oh, I don't necessarily care what the price is over the next 5 years because, oh, at the 18 years, I expect this to be all I need is it needs to pay off whatever, send the child to school or what to college. Um, People don't realize that you can take that overall goal and then split it up into smaller goals. So, yeah, in 18 years, you want the portfolio to be X amount of money, but it might actually make more sense to approach it on a yearly basis because imagine you say you want your 18 years, but then at some point along the way, or imagine for the 10 years, it just doesn't move. A lot of times you could have maybe got something else, maybe at the time that the company wasn't as good. That thing could have helped you to get more units or more money that then you could go back to that same stock that you have this, you want it to be like a stable dividend play or whatever. You don't have to um, stay with the stock if it doesn't like meet your goal for that. So I'd suggest sometimes maybe instead of just that 1 20-year goal, splitting it up, I think actually makes it a lot easier.
Mhm.
yeah, I think so. How I respond to that is, well, certainly I'm I support uh, always constantly reviewing your portfolio regardless of your time horizon. So if your time horizon is 50 years or 5 years, I still think if you decide, for example, to buy broilers every year, you should at
Mhm.
least know what's happening, or broilers every month. You should at least know what's happening with broilers. Doesn't mean that you need to know the stock price every single day, but you should at least know that, hey, they closed down Haiti, they're doing this, this is what they plan to do, this is what they plan to do. I think for some investors, and as I said, I've spoken to investors across the spectrum. So I've spoken to people. So for Theon, your industry is one of the best examples. Um, there are surgeons out there that are doing very well at being surgeons.
Mhm.
So their income from doing whatever surgery they do every couple times a week, and their consultants say on a per hour basis
Yeah.
is a lot more than if they dedicated that time to looking at their portfolio. So right, so a surgeon can do, based on the type of surgery, can make, and Theon, you are the you are the professional on this side.
Mhm.
A surgeon can make millions of dollars per surgery and do that surgery multiple times.
Definitely.
Oh, but Preston, doctor, so wait, what type of medicine does Matthew do?
He's
Uh,
in. You want to say Preston? I don't know.
yeah. So I mean, I work at UA now. Um, I work in the hematology department.
So not surgery at all.
But
Preston's not really.
but the young man. So you plan to specialize in that?
Yeah, possibly. Yeah.
Okay. Well, I mean, you guys know, the income that probably an oncologist or neurosurgeons, orthopedic
Oh,
surgeons, etc.
neurosurgeons. Yeah. Mm-hmm.
Yeah, can make. And I mean, there are other specialties as well, niche specialties,
Hmm.
particularly in Jamaica, where there aren't many people that do it. So there's a
Yeah.
very high
There's
demand
some specialties where it's
for that
just one
skill.
person, one
Yeah. Just
person
one
in the
person.
island, and then
Hmm.
sometimes that one person is needed for even other smaller islands. Like they will sometimes have heard of
Look,
stuff where they'll fly
look.
down the person to this country to do this procedure, stuff
So,
like that.
yeah,
Hmm.
man. So put your mind in in the mind of a surgeon that is needed across Jamaica, Bahamas, and Cayman. For example, they work between the three islands. They do surgeries between the three islands. And on a per hour basis, they can make, based on the surgery, based on all the surgeries and their consultancies, let's say 10,000 US dollars. And I think that's probably on the lower end for some of the people that I'm familiar with. All right.
Okay.
They're looking at opportunity costs. So
Hmm.
they're saying the amount of time that I'm going to spend reviewing my portfolio, I can spend that time doing this surgery in Bahamas, all right? Or I
Yeah.
can spend that time reading up on the latest medical technologies to do my specialty, right? Now, I think if I spend a lot of time on investing per hour, I can probably make 2,000 US, which is a lot for a lot of people. But if I stick to my specialty, I can make 10,000 US and put that in the bank and put that on a portfolio. So that person, the decision to spend time for them is important. So investments might not be the most efficient allocation of their time. So what they may say is that they may call an advisor somewhere and say, look, I know I should be investing. I just want a portfolio that I can put my money there and
Mm.
I can make anything that beats inflation a year. So if
Hmm.
inflation is 8, the portfolio is making more than 8. If the inflation is 5, the portfolio is making more than 5. And when I open a new practice in Trinidad, I just want to come draw a million US, open the new practice in Trinidad. When I decide to open it in Barbados, I come draw my money and put that in Barbados. For that person, checking their portfolio constantly, and I had this conversation with an orthopedic surgeon literally today Sunday, yesterday. Checking the portfolio is not the most value added thing that they can do.
It's not a
Right?
priority.
It's just
Agreed.
a matter of fact. He said so. The person that I spoke to yesterday. I spoke to him at the start of COVID, and I said, "Look, do you invest?" He said, "No." I was like, "Look, you know this thing almost 20 years. Mega just assume say you have a lot of money, right? And you do
Mm.
surgeries and he's a consultant across multiple hospitals, right?
Mm.
How
Bank.
you don't know who.
I
So I assume
believe
that
that.
you're
It's
making bank.
funny.
I assume that you're making bank. So of course I connected him to an advisor at my place and etc. etc. No, years after, saying, "Are you still
Mm.
at that place?" I say, "Yeah, man, I'm still there." How the
Mm.
thing going? Boy, I never got to open it fully. He's like, "What do you
Mm.
mean?"
Oh
Man is like,
Gosh.
"Boy,
no!
COVID, COVID came so
Oh
fast,
Yeah.
no!
So,
Yeah.
Yo,
COVID came fast, and so by the
you,
time I look down in 2020 and I look up, it's 2023." Like, yeah.
no,
Well,
but
I, I know what he's saying, but for me,
Yeah.
time
Yeah.
don't fly
yeah,
that fast.
Exactly.
So
I know,
and
like the
the
time
thing
value
is,
of money. So yeah.
and look at the opportunity he missed out. Almost probably every stock has likely. I feel like
A
most
lot
moved
of
stocks
them
since
been
have
COVID.
rebounded.
yeah, even and I look how high inflation was over the last is still now and how high it has been over the last 2 3 years.
Yeah.
Yeah,
Wow.
but he doesn't consider it a loss, because over the past 3 years, he's been busy every single week.
Yeah, I
So
guess.
so and he's doing something that he knows how to do it well, and his bank account is very safe because of it.
Yeah.
Right?
I
Mm.
guess the
So
only thing is he has
I've
to be careful
mm,
because with a surgeon in your hands, so you never know what could happen. So I remember what's that movie, Doctor
true,
Strange, where he
true.
ended up
Yeah. He was in
his
a
hands
car
got
crash
broken
and
and
couldn't
stuff.
use his hands, and that was it. His
Yeah,
career was
Yeah,
done.
that was his
that's
origin
a real
story.
thing.
That was Doctor
Yeah,
Strange's origin story
that's
Yeah.
a real.
by hurting.
It's a real
Yeah, yeah,
thing.
Yeah. It's a real
So
thing.
yeah. That's true. That's true.
and then the
That's
thing
true.
is too,
You know what? I
even
should I should use that next time I speak to him.
Yeah, man.
That's
Definitely.
but the thing too is that for some of them to do that amount of stuff, you have to be quite busy. Like the same point you're pointing out that that guy he works at multiple hospitals, has to be traveling between. That's a lot of time traveling there too. So maybe that's something else he could try to consider. But at the end of the day, it's his priorities. But say he wanted to like spend more time with his family, even though this method right now, as he just starts out, the same example you're saying, oh, the X amount of time could get him 2,000 through investing, but then 10K by doing his work. The opportunity cost of maybe not being able to spend time with his family, maybe if he wanted that, say, wait, I could earn less money, but I can stay at home and I actually value this more. So that's why I'm going to invest. So that's another way to even think about that too.
That's a good point. That's a good point. So he can feel that difference, not necessarily with cash, but something else of value, which is family time.
Exactly.
That's a good point.